Hello, I'm James Yardley, Senior Research Analyst at Fund Caliber, and today I'm joined by Niall Gallagher, the elite rated manager of the Gamstar Continental European Equity Fund. Niall, thank you very much for joining us.
Thank you, James.
Now, Niall, you recently referred to this year as a year of two halves. How have some European companies fared this year?
Yeah, I'd almost say it's been a year of four quarters. Not just a year of two halves. I think we went into 2020 in reasonably optimistic, with a reasonably optimistic mindset. So European economies were performing well, and if anything, were accelerating. Economies in Asia, China in particular, and the US were also doing well too. So we were quite optimistic about the prospects for many of our businesses in 2020. We then had the hit us first in Asia and then roll into Europe, which led to a significant market sell-off and quite a few reverberations through financial markets. And then we had a recovery period. And then I guess the most dramatic was the announcement on the vaccines in November, which led to a significant rotation. So it's been a year we've almost had, I feel like, several market cycles or market styles or market types within 1 year. So it's been, in that sense, an interesting year for European companies. In terms of trying to extract from all of that, I would say there are a number of things that have really happened. So first of all, we've had an acceleration of a number of key structural trends which have been in place for quite some time. So things like the acceleration of e-commerce, people buying, whether it's clothing, footwear, groceries online. I think that's been quite significant. We've also had an acceleration of many of the digitization trends beyond that. So working from home has led to changes too. We've had an acceleration in uptake of things like cloud computing, and then more broadly, things like automation have also had a boost as well. And then also we've had, I think perhaps more significantly, quite a significant difference between how Asia has dealt with this crisis than Europe and the US. And that's accelerated the relative growth of Asian economies, particularly for the consumer versus US and European. So a number of structural trends have been accelerated. Obviously, within all of that, we've also had some companies that have been hit very hard. And one of the things that we're quite interested in is how some of these companies might bounce back in 2021.
And just looking at your fact sheets, it seems like your top 10s have been moving around quite a bit recently. Is this been a year for trading? It looks like you've moved into some more cyclical names. It looks like you've got positions like Ryanair and Moncler, which seem to be building up, whilst the likes of Flutter and Nestle, I think you've taken down recently. Is that where you're positioning yourself at the moment then?
Yeah, so during the first, let's say, 6-7 months of this year, the positioning we had in the portfolio, the significant positions, were those that were, in many cases, long-standing positions, but ones that were benefiting from crisis. So businesses that were heavily focused on online, or businesses that were very focused on things that wouldn't necessarily get cut in terms of spending during the crisis. But towards the end of the summer, we began to think a lot more about the vaccine. And the more we read on the vaccine, the more we became somewhat confident that a vaccine would be announced around the turn of the year. And for that reason, we began to think about what are the stocks that would benefit from an opening up in 2021. And obviously, Ryanair is a very good example. Ryanair is a stock that was hit extremely hard in 2020, based on the fact that most of their network was down because people couldn't travel. And we anticipate a really big bounce back in 2021. And Moncler, another good example, the business was hit by the lack of traveling in 2020. And again, we expect it to bounce back in 2021. So yes, certainly as we ended the summer, approached autumn and into winter, we began to think much more about where are the stocks that potentially might have a big bounce in 2021, and taking some profit from things that had done well and recycling that into things that had lagged, where we think there is a big bounce back potential.
And are there any other stocks today which you particularly like?
So other things that we think are well positioned, we have a number of stocks that are exposed to automotive cycles. So we have some auto parts businesses. We have a business called Faurecia, which we think will do very well in 2021, based on a recovery of auto sales, but also they have some very interesting contracts which they've won, which begin to come into their revenue base in 21 and 22. So that we think will do well. We also have Nokian Tires, another business that we think will have a good recovery in 2021. And there are some structural things going on there too. So I would say that where we have perhaps emphasized a bit more are on some of the things that will have a strong earnings acceleration in 2021. Now, at the same time, we do believe that many of the structural trends that have been in evidence for a while and got accelerated in 2020 aren't going away. So we still have significant positions in stocks like Zalando and Flutter, which are benefiting from e-commerce penetration. We also have the position Delivery Hero. So we're not changing the portfolio structure away from those types of trends that we think are strong and will remain in place for quite some time. It's more just trying to re-emphasize those stocks that may have fallen back a bit because of the hits to their business, the economic hits to their business in 2020.
And do you have a strong view on the Brexit trade talks at the moment, and what implications might that have for your holdings?
I think ultimately a deal will get done. I think it was always our view that a deal would get done. A lot of things in Europe, and I guess it's like many negotiations, they always go to the wire because everybody has an incentive to try to get the best deal or to try something on towards the end. But I think both sides know roughly what the contours of a deal will be. There will be some last minute haggling over things like fisheries, but I think a deal will get done. In fact, we're fairly confident a deal will get done, and we have been all the way through. In terms of what I think will happen, we have a number of stocks that have exposure to domestic UK. It's mainly our Irish holdings, which have operations in the UK too. I think domestic UK is actually quite an interesting area because after the Brexit referendum in 2016, there was a big drop in business investment in the UK, and it looks like that's beginning to bottom out and may improve if we see a Brexit deal. On top of which, with crisis, there's an awful lot of people who've been accumulating cash in their bank accounts because they haven't lost their jobs or they've been furloughed and they haven't been able to go on holidays or to spend. So actually, I'm fairly confident that the UK will have probably one of the stronger economic recoveries in 2021. And for that reason, we have some UK exposure through some of our Irish holdings in the portfolio.
And Niall, how has the fund fared year to date?
We've had a fairly good year so far. So to mid-December, the fund is up about 20% in sterling. So it's been not quite the year I would have expected back in mid-March, but we've had a strong recovery from the sell-off. A number of our longer-term holdings have done really well in 2020. Stocks like Zalando, stocks like Flutter, some of the luxury positions in the portfolio like LVMH, they've all worked very well. So on that extent, it's been a pleasing year.
And what is your outlook for Europe next year? I mean, is this finally a year where Europe can outperform the US?
I think Europe will perform well next year. I mean, the major economies have been hit fairly hard. More recently, it's been Germany that's perhaps on a relative basis been hit a bit harder, given that their coronavirus experience has been worse in the second wave than the first wave. But the continent as a whole has seen quite a big decline in the economy. So I think there will be a strong bounce back in 2021. The asset class is still reasonably good value. It's not cheap, but it's reasonably good value. So I think that is a help as well. And the market is naturally a bit more cyclical than the US market too. So I think 2021 will be a good year for European equities.
Brilliant. Well, Niall, thank you very much for your thoughts and thank you for joining us today.
Thank you.
And if you'd like to know more about the Gamstar Continental European Equity Fund, please visit fundcaliber.com.